Global crude oil prices just suffered a violent, sudden crash. We're looking at the steepest monthly drop in oil since 2020. And while energy markets cratered, the stock market, specifically the S&P, and major crypto sectors experienced a rapid, euphoric rally. Money flooded in. Here is the problem. Zero physical supply lines were altered. The macroeconomic data stayed flat, and global trade policies didn't shift by a single comma to trigger this massive financial swing. So how exactly did the global financial market get flipped completely upside down by a single unverified rumor? The singular catalyst for this multi-billion-dollar market shift was a unilateral social media post by Donald Trump on his platform, Truth Social. In that post, Trump announced that the United States is lifting its blockade on the Strait of Hormuz. He claimed that commercial ships currently stuck in the region would finally be allowed to go home to their families. He didn't stop there. He made highly specific claims about a finalized negotiation with Iran, stating that an agreement was in place to clean up enriched nuclear dust with the help of international partners. That single post triggered a market frenzy. Secondary rumors started flying about a $300 billion post-war U.S. investment in Iran, and stories circulated of intermediary diplomats flying between Washington and Tehran, acting as messenger pigeons. Before we look at the physical reality on the ground, take a second to like this video, share it, and subscribe to The Market Monk. We cut through the noise so you get the unfiltered truth. Wall Street algorithms aggressively priced in a total regional de-escalation. They bet on a return to normal shipping lanes and nuclear cooperation based entirely on a single social media post. Let's hard pivot from Wall Street to the Middle East, because the Iranian government had a very different story to tell. Iran immediately issued an official response. They flat out denied that any negotiations had taken place. Zero. Iranian officials publicly mocked the unilateral U.S. announcement. They clarified their diplomatic stance, demanding physical actions and concrete measures over what they viewed as empty political words. Meanwhile, back in Washington, the internal contradictions are glaring. The U.S. Department of Defense is completely out of sync with this political peace narrative being sold on social media. Far from packing up and going home, the U.S. military, alongside the U.K., is actively issuing warnings to their forces and preparing for major impending military operations in the region. On one side of the world, day traders are clicking buy based on a diplomatic breakthrough. On the other, the actual naval forces are moving into intercept positions and checking their missile guidance. Even if the political will existed, the physical reality of the Strait of Hormuz prevents any simple, unconditional overnight reopening. Look at this diagram of the strait. Iran has heavily mined these waters, creating a lethal, hidden choke point that physically stops any commercial or military shipping from passing through safely. And those mines are protected. Iran has activated sophisticated defense systems stationed across strategic islands like Keshem, Larak, and Hengam. These batteries project wide, overlapping threat radiuses directly covering the minefields. This creates an impossible tactical bind. If the U.S. wants to clear those mines, they have to send highly vulnerable minesweeping ships directly into active, overlapping missile zones. At the same time, Iran is actively patrolling these coastal waters. Their fast boats and submarines are fully prepared to defend those islands at a moment's notice. Lifting this blockade requires a major, high-risk kinetic military engagement. A purely diplomatic tweet is physically impossible to execute on the water. This brings us back to the core conflict, the highly dangerous gap between Wall Street's algorithmic trading logic and ground-level geopolitical reality. Modern markets trade on a concept called information arbitrage. Algorithms react violently to the speed of a rumor. They buy the headline instantly, rather than waiting to verify the factual accuracy of the event. That false peace narrative temporarily masked an unresolved geopolitical threat. Iran's nuclear program is still a massive variable, and the stakes remain incredibly high. Retail traders bought into a naive market optimism, completely ignoring the looming, undeniable threat of a U.S. military escalation that is still fully active today. Within hours of the Iranian denial, those market gains began to evaporate, leaving anyone who bought the rumor holding a losing position. When markets act as puppets to political rhetoric, the ground truth usually arrives with a massive price correction. To avoid these volatility traps, you need to base your trades on physical reality. Subscribe to the Market Monk right now so you can look past the illusions and stay ahead of the algorithms. See you in the next one.